Warren Ingram, Galileo Capital, best ideas. Okay, Chris in Cape Town, are RAs a good investment? Chris, that question next week, please, because we are coming up to tax season, and it's a very important question. So please take Chris's number. Let's phone him back in next week and get him to ask his detailed questions on retirement annuities. In short, yes, they are if they perform, not if it's my retirement annuity which got clapped in the last quarter of last year like everyone else's.
No, it's not about performance. The performance was the markets. You can't, a good one and a bad one would have done badly last year, but it is about cost. So yes, it's a good idea as long as it's cost effective.
Okay, we're going to talk about that. I promise, Chris, we will talk about retirement annuity. Tonight it's tax-free savings accounts and Warren's claim that he's going to give us his best ideas.
So
you better start with the best one first.
The best one first. So the sector of the South African markets that took the biggest hiding last year was the listed property sector. Those are the property companies that trade on the stock exchange. They own most of the big shopping centers, office parks, and big storage places, these logistics storage places that we see in big cities.
And we know why. I mean, we've had the threat of rising interest rates, and that's never good for the property sector. We've had companies like Edcon threatening to go bust, and they are the biggest tenants in the South African retail sector. We've had a bull market in property shares where they could only ever go up for more than a decade. Eventually something had to crack.
Yeah, and then they took a few big bullets that surprised everybody. So one of the big ones was around there were a lot of big international, or not big, but just international property companies that were based in places like Poland and broader Eastern Europe that decided to do a secondary listing on the JSE here in a time when South Africans were incredibly fearful about their prospects for South Africa. And so these were ways that people could use money that they then invested via the JSE and get international exposure to an asset class that South Africans tend to trust, which is property. So that was a wonderful story until it wasn't, until that kind of bull market in those things also turned, because interest rates started rising definitely in America, but in, the prospects for interest rates turning in other countries was real. And then that same dynamic that we see affecting, the big shopping centers in South Africa is felt much more severely in the US and in other markets as well, with kind of the Amazon effect of online retail decimating the big shopping malls. So that was one big issue as well. And then a group of companies that are collected together called the Resilient Group of Companies got pinged by some pretty in-depth research that showed that the way that they are treating the revenue in their business is possibly not the way that property companies should be treating their revenue. It's far too early to say that it's fraud or corruption or anything like that. Could be a difference in interpretation. It could be fraud. I think we are all waiting for what used to be called the Financial Services Board, now the FSCA, to publish their report. They are a year in and there is no sign of when that will come out. So that's hanging over their heads. Then we had land expropriation, big issue.
Without compensation, again, lack of confidence. Yeah, absolutely.
And all of these things combine to cause the property market as a whole, the listed property market, to lose 25% of its value. And that's a heck of a knock for a sector where people tend to rely on it for income, because those companies tend to pay very nice rent. And then they see just a decimation of their capital. And for someone like me, I think I sat on this chair a year ago saying my kind of call for the year was, for tax-free savings, was listed property. And
so anybody who followed you,
they don't like me.
There is going to be hate mail.
Yes, and it really starts with my staff and my wife, because that's where we started with our tax-free savings accounts.
It explains the limb.
So my one leg is now permanently shorter than the other, and that's my call for the year.
So look, I mean, eventually you'll get it right. If you call the property sector for tax-free savings accounts often enough, 1 year it'll bounce back.
The broken clock is right twice a day.
Yes.
So just to give you the logic as to what's going on there, if you look at property companies, you're looking for two things from them. One, you're looking at the rent that you're going to earn, and they call that the rental yield. And the second thing that you're looking for is the capital growth. So at the moment, if you look at that whole sector, it's paying you rent of about 9% or so a year. Across the board. Good companies, bad. The average is 9. So if you just bought an exchange traded fund which owned all of the companies in the property sector, you can expect to get an income of 9%. And just to give you some idea of the logic there, I mean, we've seen the bad economic conditions. We've seen all the tenants that have pulled out of the shopping malls already, the office buildings that are empty. So
There are lots.
I don't think it gets.
Have you looked around this ghost town, around this part
well,
of
right next to this building? There's
yes,
very big.
there's one down there. There's one across the road down there. The old Sun International building. Yeah. I mean, there are lots down Fredman Drive. Oof.
And then lots of new big buildings being built around here. Yeah. So there's big competition. But I think that news and that the bad news is in the price at the moment, and these companies are still generating a rental yield of 9%. If they do really kind of just average as a business and only generate rent that grows at 6% a year, that means that you've got your 9% growing at 6% a year. That's a very attractive return on any kind of investment right now, with the potential, I think, of a capital recovery from that 25% knock to do better, to grow from those losses.
What's the word that you've used once or twice over the last couple of years as we've chatted about investments? Oh yes, diversification. So, eggs basket one, property sector, you say. Come on, you can do better.
No, so I would say that's a good thing for one type of investment, which is tax-free savings. I wouldn't say that we take all of our investments that we've got in our retirement funds and everything else and put that all into listed property. That's not a good idea, because there is no diversification. But for somebody, for example, who only has enough money to put into tax-free savings, all their savings in the world is 33,000 Rand a year, then I agree with you. Then you don't go and put all of that into listed property. So then we get to my second choice. Right. And to me, I think if we look at the knock that the property sector took over the last year, let's look at the stock market, the South African stock market over the last 5 years. It's done worse than inflation per year for the last 5 years.
Correct.
You've gone backwards with inflation. And I was looking at rental yields of property companies. If you look at the dividends that some of the businesses on the South African stock market are generating, especially the banks, they're paying very attractive dividend yields of about 7 or 8%. And that's almost as much as you can get if you put money on a long-term fixed deposit in a bank. So to me, again, the potential for that dividend to grow at a rate faster than inflation, much more tax efficient. It tells you that the broader sector, the broader financial sector, is actually, I think, at very good value, and actually the whole JSE is good value. So to me, that would be my second choice. Is then kind of typically an exchange traded fund, and you get ones called equally weighted, where you would say you allocate exactly the same proportion to all the top 40 shares,
so that you don't get a disproportionate exposure to Naspers, for example, which makes up 20% of the index. Naspers could go from 3 to 4,000 Rand, or go from 3 to 2,000 Rand. We have no idea what
it did go from 4 to 3, and if you had your 20% exposure, it was very painful. So that's why I like the equally weighted. So that would be my.
But the equally weighted also takes the vavavoom out of the market. It takes the excitement out of it.
We're not here to get excited. We had to make good money over the long term. Excitement is what you get in the casino, or if you
drive a fast car,
or if you want to really gamble your money, go and buy some cryptocurrencies and watch them lose value. That's just a dig. So to me, that would be my second choice. The third choice would be, if we look at the international markets, every major market in the world lost value last year. Just to give you a context, US market dropped 20% in 3 months. So things really did fall quite quickly and sharply last year. So if we find the Rand trading at close to around about 13 Rand 50 to 13 Rand 90, and I think it's not far off those levels, then it might be an idea to use a Rand-based overseas exchange-traded fund or unit trust for the third choice for your tax-free savings account. So there's nothing stopping people to do that diversification you're talking about. In other words, saying do a third if you want to, or do half. You can do that as well. But if you're asking me for my best idea, what am I doing with my money? Because that's either the best or the worst indicator, depending on your view. Then I'm doing the tax-free savings as choice number one.
You need tax-free savings account into the property sector because you've got other investments. So the fact that you're putting your entire 33,000 Rand allowance into the property sector doesn't mean that you're totally exposed to the property sector. It just means your tax-free savings account this year
that's where the money will go.
is going into that particular sector.
Yeah, and there is a really good chance that the capital doesn't move at all, so the capital price doesn't go, but the rent is kind of not guaranteed. Nothing's guaranteed, but that to me is a more low risk call to make. That at least I'll earn the rent out of.
You know what's freaking me out at the moment is the CEOs that I talk to, and I'm saying, so what you doing? Man, waiting for the election. Oh, it is so infuriating and frustrating. Everybody's sitting on the sidelines waiting for the election, expecting that I'm guessing the election, it'll be announced next week, I suppose, because we've got the last registration weekend this weekend. I'm guessing that we'll have an election on the 8th of May, and everyone expects like the outcome by the 11th of May, or 3 days after the election. And then on the day after that, there'll be this miraculous turnaround in fortunes, and everybody will go, Kumbaya, Ramaphosa, we're back, and everything will start flying. I just wish people could get a bit more even-tempered about the state of the nation.
And I think, what's interesting is we look at where the smart money's going. So you just spoke a bit earlier about that big acquisition, and that's a foreigner buying a big chunk of a South African business. And I think there are more and more of those stories happening. So to me, the really smart business people in South Africa right now are going into what used to be a burning building that I think the fire has been put out, and they're starting to get great value at bargain basement prices and starting to do the deals that will pay huge money over the next 5 and 10 years. So those people that are waiting, those CEOs that are telling you that they're waiting till the election, either they're bluffing and actually they've already done their great deals and now
they wouldn't lie to me, surely.
Never. I've never met a CEO who'll lie. Or I think that they're being naive, and I think they're being overly emotional and not rational enough. The bad news is done. Yes, we've got problems, and yes, it's going to be kind of difficult, but now rational investors should be looking at this and saying to themselves, there are some great opportunities here, and now's the time to take advantage. Now's not the time to be fearful.
Next week, retirement annuities. Got a lot of people have been throwing money into retirement annuities year after year after year, seeing the money going nowhere, which raises the question, I think it was Chris. Are retirement annuities a good investment? Retirement annuities are essentially unit trusts with a tax benefit built in. We need to talk about that. Also, Section 12J. We did the science of 12J this week. Is 12J the place to put money? Higher risk, potentially higher returns, doing a good deed. Can we combine the RA and 12J? Can we do a combo?
Yeah, definitely. And I think also just to talk about offshore allowances, because that's also relates to the tax year.
Very important. Warren Ingram next week on that subject. Thank you, Warren Ingram.